As usual, we've got Gary Booysen from Rand Swiss to join us to talk through some of those figures that came out today. Gary, many thanks for your time this afternoon. Let's start with that overall market picture. Yesterday, we were marginally in the red. The big story there was the resources dragging the local bourse down. Resources still not doing too well, although we did see some good, solid movements from your industrials. Your thoughts on the movements that we saw today?
Yes, it's always a little bit difficult coming off the US public holidays. We had Labor Day yesterday, which meant the S&P 500 was closed. So you find global markets lack for direction when the largest economy in the world is out of action. But we had a very upbeat Asia. We're still seeing some recovery from eNCA that fed through to the local market. We also saw a big jump in Chinese exports, which I think just fueled some optimism that the Delta variant is not quite having the same impact that market participants were expecting. And that, it helped us across the board. So we saw, likes of ShopRite, where we had results out, that up around 2.5%. Capitec also doing pretty well. Saw Bidvest a little bit on the back foot, that down around 1.6%. It did release results yesterday. It's also a bellwether for the South African economy. So I don't know if people were trading that lower just based on the GDP figures that we got earlier today.
Yeah, and I'd like to touch on GDP numbers with you, but I want to start with companies first. We saw Imperial coming out indicating that they are still feeling the effects of the tobacco and alcohol bans. This despite showing some positive growth. What did you make of the numbers that they released this afternoon?
Yeah, so a lot of the numbers were already guided in previous trading statements. So headline earnings up 218%. That was at the top end of their guided range anyway. As you said, the pandemic cost them around 2.6 billion. So suffering there, they also highlighted the impact of the civil unrest in July and August as having impact on the numbers. But you've got to remember that this company is under offer at the moment from Dubai-based DP World. So certainly this is a company, if it's about to get into a marriage, it's dressing itself up nicely. So I think that the numbers looked very optimistic. The commentary was certainly very good. The one thing around the deal that did stand out is that it could potentially close towards the end of February 2022, which is about 2 months longer than people were expecting. And that might have just had a little bit of an impact on the share price today. Of course, the company is holding back its dividend until we have some sort of understanding of how that deal is going to go through.
Yeah, another company that was out today, ShopRite. I mean, they are shooting out the lights, Gary. I don't know what it is about them that they are able to operate in the current environment. They created almost 4,000 jobs, improved sales. Checkers is doing very well for them. And, of course, USave, I assume they're still benefiting from those 350 grants in that USave market. And, I mean, it's an amazing growth story for this retailer.
No, it really is. They made 168 billion rand for the year in revenue, which is a record. They've never made that much. And of course, they're not facing the same pressures as a lot of other businesses in the South African economy. They were declared an essential service, and the majority of their products were available throughout lockdowns. Of course, that didn't apply to Liquor Shop, so the alcohol sales were still hurt. I think they had around 144 interrupted trading days. But you can't take anything away from this company. I mean, with the launch of Checkers 6060, they've had 1.5 million downloads. It makes it one of the most popular grocery apps for at least food delivery. It's servicing 233 stores. So definitely getting their digital offering right. And they seem a long way ahead of the competitors in that regard.